Time for the word on Wall Street. Top investors watching your money. Optimal Capital Director of Strategy, Francis Newton-Stacy, with us all morning long. And joining us now, Michael Lee, Strategy founder, Michael Lee. Michael, let me kick it off with you. Big week for retail earnings. Walmart, Target, Home Depot, Lowe's, and TJX, the parent of TJ Maxx, among the retailers reporting earnings, with retail sales numbers for the country out on Wednesday. What are you expecting?
Well, Dagan, I think this is a case of very low expectations. So in the case of Walmart and Target, you've already had some pre-announcements earlier this quarter. Walmart took full guidance down for the year over $1. Target warned on excess inventory, and you're going to start to see this across all retail, is a kind of a whiplash effect where companies had such a hard time getting inventory that they ordered an excess of supply with the hopes of meeting that demand, but demand has fallen off a cliff. So I think we're going into this with extraordinarily low expectations, and you're setting yourself up to beat those low expectations and potentially pretty positive markets. We're in a very peculiar situation in the market where bad news in itself is almost the good news, because so much has been focused the entire year on what the Fed is going to do and how inflation is playing out. And so if we have, in fact, reached peak inflation and the Fed is not going to be as aggressive as previously thought, that's very bullish for the market. And you came into this situation we're in right now with an extraordinarily bearish hedge fund community, a lot of cash on the sidelines, and we are now sitting in the midst of one of the most hated market rallies ever, and we're very close to the 200-day moving average for the S&P 500. If we get some close above it, you start seeing all these algorithmic buyers, CTAs, that are buying on strength and momentum, buying to the upside. We're typically accustomed to seeing that to the downside where it gets really ugly, but we're in a really interesting situation right here. And so names like Target that have just gotten, they're down 33, 34% year to date versus 11% in the S&P 500. It's not going to take that much to push that stock higher. So you could be in for some surprises this week, albeit on very low expectations.
Let's talk about the possibility of this new hurdle as record stock buybacks, which surged in the wake of the COVID pandemic, have begun to slow. Major companies like Best Buy, Starbucks, Citigroup, JP Morgan, Chase are all pausing buyback plans, opting to hold on to cash. Does this hurt the market, Mike?
Yeah, absolutely. I think you have a level of economic uncertainty with some of these companies. That's what the boardrooms are saying. But it's, it's always been said that these CEOs know their company the best, and what they're seeing should be an indicator for the market. But it seems like when stocks are at all-time highs, they can't wait to buy back enough stock. And when stocks are down 15 or 20%, they're very hesitant to go out and buy back their own stock. So I don't know if that's necessarily a good indicator. And the buybacks themselves, I don't know that that's necessarily the best way for companies to spend cash, but these are tax-free dividends. So it just comes in a different form of capital return in terms of buying back stock. So I would, having slowdowns of buybacks is not good for the overall market, but I don't know how much of a difference that's going to make in the second half of this year.
Francis, let's talk housing. The National Association of Home